It was signed in. Okay, can you guys still hear me? Please, can you confirm you can hear me? Somebody should just confirm.
Yes, I can hear you.
Okay, thank you. So, of course, we are aware of the recent Finance Act that was released in June 2023, and which was signed, of course, in May 28th, according to the Finance Act, was signed May 28th, 2023. So the Finance Act, like we all know, or for the purpose of those that may not know, is just like a way of managing tax law, right, in line with the recent changes in the tax environment, recent modernization that we have in the country, and also bringing the tax law to reality. So we have cases in the tax law that says, if you don't do this, your fine will be 10 naira. Your fine will be 20 naira, your fine will be 15 naira. And people, so if you do, that means if you do that, if you commit that crime, your fine will still be 15 naira. Meanwhile, those 15 naira, 10 naira, as at that time, was a huge money. So the recent changes in tax law are just to correct those, those loopholes that are in the tax law, and also to upgrade the tax law to meet the recent things that we experience in our time. So if you see Finance Act coming up, aside from the fact that government wants you to increase their revenue base, to increase compliance and the likes, they also want to use it to correct existing mistakes, or let me say anomalies in the tax law. So sometimes the tax law also contradicts each other. Maybe a paragraph contradicts another paragraph. So that is the purpose of Finance Act. It's actually just to make correction and then to now achieve the budget. So another purpose is to achieve the set budget. Let's take, for example, let's assume that education tax generates 20 million naira over the past 10 years. And we've been generating 20 million, 20 million, 20 million, 20 million. By default, this year, based on the increase, there will be an additional 0.5%. Okay, let me say 50%. Is that 50%? Yes. So 2.5. So there will be like additional 0.5 additional that would increase on that amount. So, and what it means is that there's more revenue to the government to carry out their obligations. So some of the changes in the Finance Act, as mentioned, includes Capital Gains Tax Act, right? I don't know everything offhand, but I'll just mention some of them. So the CGT included items like the cryptocurrency, and disposal of such assets will now attract 10% CGT. We also have, under company income tax, we also have the repeal. So I'll be picking just one item under each for the purpose of this call. So if you need specific details of them, maybe you can check on my LinkedIn page or check on some other Big Four pages, check on FIRS page. You can see some detailed information about each of these tax law. But for the purpose of this call, I'll just be pinpointing some of the key changes. So under the CGT, like I've mentioned, so disposal of assets such as cryptocurrency will now be subjected to CGT at 10%. We also have the company income tax aspect. We have the repeal of investment allowance, right, enjoyed on some capital expenditures, such as those incurred on power, road, third road, and what's it called now? There are some investment allowance that are granted for carrying some certain activities in the rural areas. So this investment allowance has now been repealed with effect from, according to the clarification provided this morning by the FIRS. So this also is effective from July 2023, right? So companies that have incurred capital expenditure on road infrastructure and the likes, and who are supposed to have enjoyed what we call the investment allowance, then such company would no longer be able to enjoy those kind of categories of allowances as mentioned in section, that should be section 34. So moving on, we also have other aspects such as Personal Income Tax Act, right, that also change premium paid for insurance contracts delivered by annuity and the likes. So the tax law, what they just changed there was that it will now be allowed as a deduction for Personal Income Tax Act. So prior to now, of course, it's not usually allowed when they brought in the CRA, consolidated relief allowance, but now it is now being allowed. So we also have the Petroleum Profit Tax Act. So we look at the introduction of deductible, the commissioning of the abandonment expense provision in line with the PIA. So of course, when those oil blocks are being suspended most of the times and abandoned, of course, they cause some what we call the sustainability environment. So there are some issues that those things triggers. We have sometimes oil spillage and the like. So what they've now done is to introduce allowability of deductible decommissioning. So the commissioning costs, people that do SFM in ICANN, you understand what they've done. And if you don't understand, just read about it and have more insight on that. So we also have the Value Added Tax Act. So, and that was also changed. Some things were introduced, such as power to appoint any person to withhold or collect VAT, right? So, and also the fact that withholding tax and VAT withheld. Sorry, somebody was trying to say something. That from the admin. Hello. Okay, let me go ahead. So we also have the VAT withheld or collected in, of course. So for VAT withheld or collected from other entities or other companies, FRS has now mandated that taxpayers in this category are expected to remit such VAT on the 14th day of the month following month of transaction. Now, don't mistake it. There is a difference between VAT charged and VAT withheld. So VAT you charge, right, on your own invoice. That one is normal. That one is as part of your obligation to remit the VAT to the Federal Revenue Service. However, the FRS appointed some specific agents, such as the MTN, Airtel, some other telcos, banks, and MDAs to specifically withhold VAT from transactions. So those are the ones that the FRS is actually emphasizing on, that they are to remit their VAT withheld from transactions on or before the 14th day of every month, while other companies will still
I can't hear you again.
We can't hear you.
As if he has a
Hello. Please, can you confirm you can still hear me now?
Yeah, I think I can hear you now.
Yeah, sorry, my internet just disappeared. All right, let me share my screen back now. Can anybody just remind me of the last thing you had so that I can know where got disconnected?
I think you were emphasizing on the days of remitting withholding, VAT, in which the telecommunication, MTN and co are to remit their own, while you now said while other companies from there your voice now cut off.
You were differentiating between like VAT charged and VAT withheld. So
All
that's what
right,
you're
thank
talking
you
about.
very much. Thank you very much, guys. Yeah, that means everybody was following. Thank you for that. So yeah, continuing from where I stopped. Now let me just really move to the next part. So update on VAT valid tax filing process on Tax ProMax. So of course, the FRS finalized the process around trying to upload your schedule, right? Prior to now, you just go to the Tax ProMax and you put in your figures, revenue, disclose your revenue, disclose your adjustments, disclose your input VAT and output VAT and everything. Then you file your tax returns, which has been going on smoothly, very fine. But recently, the FRS is just trying to do what? They want to checkmate what you have been disclosing. It's just an attempt to actually check whether some of the input VAT you are enjoying should actually be enjoyed, right? And they want to treat it from the source. So while I'm not completely supporting the activities of the FRS, we should also see the good in what they're trying to do. So effective from I think next month, we will now be filing our input VAT and output VAT by uploading the schedule. We upload the schedule that contains the name of the taxpayer, taxpayer ID, the nature of the transaction, the amount that you remitted, and the class of the VAT. So whether the product is VAT exempt or VAT or VATable item, rather. So that is basically what happened under the update on filing process for Tax ProMax. Then we also have the LRS new process for obtaining tax clearance certificates, which was released in April. So of course, there are many other states that are doing many other improvements in terms of their electronic tax system. But I've picked these ones because they are the ones that we, of course, they are familiar with and they are more prominent amongst others. So LRS introduced new process for obtaining TTC. And if you have friends in the UK, in the US, you see them chatting you up, Richard, I cannot obtain my PTA, I cannot get my this and that. Please, can you help me with getting my tax clearance certificate and the likes? So all these are being put in place to ensure one, tax compliance, making sure that everybody remit their taxes. Two, to ensure that the government has enough revenue, right, to finance its business, which is the economic prosperity of the nation. So introducing the new process for TCC also helps to remove, of course, the hassle around having to run a tax data to get your CCC. So prior to now, you know how you do it now. You go to FLRS, APC, and the likes to get your TCC. Right now, if you have filed your tax returns, you have paid, and you have accurate information, go to your portal and download your TCC. Very easy. Now, finally, one of the key developments is also recent FRS engagement, right, with taxpayers. It's a very welcome development. We've seen the FRS, rolling out updates, sensitization, tax news. So for some of us that are very interested in tax, and for people like me that wrote about tax in my project when I was doing my undergraduate, I find it very interesting because it looks like FRS is now taking note of some of the points that we've mentioned and what most notable authors have already mentioned in terms of stakeholders engagement, taxpayer education, and the likes. So all these have a way of also increasing the tax base and then ensuring tax compliance. So and I think that brings us to the summary of this session. And just for that's not all. I think I've gone past my time, but let me just quickly wrap up. So tax compliance and enforcement aspect of this. So the so let me just really move to the slide. So tax compliance and tax compliance regulations. Sorry, there's something blocking my screen over here. This is some button stuff, right? So let me see if I can hide it for now. Okay, good. Thank you. So now we have the tax compliance requirements. So for tax compliance requirements, I've just tried to extract different types of taxes and then their compliance requirements in terms of due dates and then consequence of non-compliance. So under the company income tax, for example, which is number 1 item here, it is done annually. The frequency is annually at the end of the accounting year. And the due date is that the due date is 6 months of the company's accounting year end, right? Within the 6 months of the company's accounting year end. However, for a new company, it is usually earlier, right? Earlier of 6 months or 18 months. So still the same thing, actually. If you look at it very well, still 18 months is still 6 months, within 6 months of the company's accounting year, which is supposed to be a 12-year calendar month. Now, moving on, consequences of non-compliance. So if you fail to comply with the CIT, right, failure to file attracts 25,000 naira in the first month and 5,000 naira for each subsequent month in which failure continues. So in addition, the penalty of course, that are familiar with Tax ProMax, after 25,000 and 5,000 naira, you still have a penalty of 10% of the amount payable and an interest of 19% of the amount payable that would be subject to additional penalty. So the cost of non-compliance is high. Let's take, for example, my tax is 10 million. And because I did not pay on time, 10% penalty applies. That means I will pay 10% of 10 million will be 1 million. So I'm paying 11 million. Now, because I did not pay on time again, I'll pay additional 19% interest. So 19% of 10 million is under 19, that's 1.9, that is 1,900,000. So instead of paying 10 million, at the end of the day, I'll be paying that will be 10 plus 1.9. So that will be 12.9 million that I'll be paying instead of 10 million. So you can imagine how much extra you have to pay because you did not comply, just because you miss 1 day or 2 days. So it's important to take note of those deadlines. For withholding tax, we also have similar deadlines that are being stated here. I don't know if this material will be shared subsequently, but for the purpose of this call, I don't want us to be bored with so many stories around it. But each of these tax laws have their own due dates and their consequences. So I'll just quickly run. So withholding tax is due on the 21st of every month, while for state internal revenue services is due on the 30th of every month. The penalty for non-compliance is 10% penalty of the amount not paid, and currently 90% additional interest. For next slide, please, somebody, can the person mute himself? Somebody is unmuted. Thank you. So for the next slide now, value-added tax, right? This is also filed on a monthly basis, and it is due for filing on or before the 21st day of every month. So VAT is filed with the Federal Inland Revenue Service. For the purpose of those that might not be chance to check the tax law and you rely on ChatGPT, please take note that some of these tax laws as quoted by ChatGPT is not correct. So this is not to discourage you from using it, but don't just go and rely on AI to give you your information. If you type it online now and go to Google and search, what is the penalty for VAT in Nigeria? It will show you that it is 5,000 naira for every month. Meanwhile, it has been upgraded to 50,000 naira. So many other things like that too that has changed. So it's important that for all these tax compliance requirements, we all have the actual facts, right? And this can be gotten from reputable organizations and their publications, as well as gazetted information from the Federal Inland Revenue Service. So monthly, VAT is filed on a monthly basis and is due for filing on the 21st of every month. Consequence of non-compliance is 50,000 naira in the first month of default and 25,000 naira in the subsequent month in which default continues. In addition to that, there's also another parameter that's been set on Tax ProMax, right? So if you don't file as a when due, you have additional 10% of the amount not paid and then 19% of it as interest to become additional tax penalty and interest. So we have the capital gains tax. Prior to now, this one was filed just once in a year, but now the Finance Act, I think 2021, yes, extended year 2021, has made it more flexible that you can now file your CPT returns twice in a year, 30th of June of every year and 31st of December of every year in which the asset was disposed. For assets that were disposed between January to June, the CGT on it should be remitted on 30th of June. While assets that were disposed between July and December, right, the CGT should be remitted in December. So that's basically what the tax law says. So then we have the payee. So payee is due for filing before 10th of every month or the month following month of transaction. So the reason why the tax authorities are not so stringent about this sometimes is because some companies do not even pay. They don't pay their salary for their employees until the 7th or 8th day of the following month. So the tax law is a bit flexible around when this should be filed, even though there is a specific date, but you will notice that the tax authorities, the agencies are a bit flexible about the filing deadline. So, but they are always more concerned about the annual returns that are being filed. That one, they will usually wait for you. If you miss it like this, you're under penalty. So it's important that we note all these changes and then the penalty and the due dates concerning each of them. So we move on to pension. Pension has its own day, not later than 7 days from the day salary was paid. We have the NHF. So this one is voluntary now. We have the ITF and then other aspects of the taxes too. So this is just like a summary of the tax compliance requirement that is relevant for young accountants, company accountants, consultants alike, and many other people that might need information on this tax compliance requirements. Then the last slide about the conclusion. So conclusion here is that tax is inevitable. Inevitable can be used interchangeably with the word unavoidable. So tax is inevitable. Everyone pays tax, whether directly or indirectly. So you need to know that first. Number two, participants, which is you guys, are encouraged to fulfill your civic rights, civic duty by understanding and complying with tax laws. So when you earn some revenue, earn some income and the likes, it's your right to, of course, enforce your employer to pay the taxes. And if it is directly, you are the one running the business by yourself, it's expected that you pay your taxes, right, to avoid undue or unnecessary exposure from the tax authorities. Now, it's also important that we, as young accountants, embrace the culture of voluntary tax compliance and understand the positive impact it has on Nigeria's progress and development. So since we are looking at the Nigerian tax system, it's not just good that we know it, it's also good that we also know how to enforce it, right? I remember I worked with one organization, and when I got there, throughout my stay there, they did not miss any one single deadline. They paid all taxes due, comply with everything, and that is what a patriotic citizen, as well as a young accountant, right, which is, I know, is what CFO Africa is trying to promote. That is what you should do. Try to ensure that taxes are being complied with to the best of your capacity. Now, finally, we have where you are unclear about the provision of a tax law. Endeavor to seek professional advice, leverage available resources, and engage with tax authorities or consultants, right, for assistance and guidance. So where you are unclear, you don't know what to do. So instead of doing the wrong thing, it's better you seek advice, seek clarification, and ask questions around these tax changes. So I hope that with these few points of mine, like we say when you're doing debate, I'll be able to convince and not confuse you. So yeah, that brings us to the end of the session. And feel free to drop your questions, and I would be glad to provide answers. Thank you very much, everyone.
Thank you very much, Richard. I think someone raised the hand. Okay, Tomini Kayode, you can go.
Yeah, good afternoon, everyone. Richard, thank you very much for this insight. So my question is, in my company, we want to try and separate a transport because we have staff that visit let's say 5-10 outlets in a day. So what we want to do is just to give them a fixed transport on a monthly basis. So will you advise to put it on the payroll, or we just separate it? It's not a reimbursable, just a given. So it will be a fixed amount every month. That's what we'll pay them. So what will you advise on that?
Okay. Thank you very much for that question. So, of course, based on my profession as a consultant, we are not allowed to give specific answers to unique questions like this. So I will just advise that if you can chat me personally, right, I can provide answers to the best of my knowledge to you. So for the purpose of the public, right, I can't provide the direct answers to specific questions concerning the organization. So thank you. I hope you understand me for that.
Yeah, I get you.
Yeah.
All right. Thank you very much.
But if you chat me up, I will definitely answer you. If you can chat me on LinkedIn, I will provide an answer to you. Yeah.
Oh, you are not accessible on LinkedIn.
Okay. Don't worry. I will drop an email that people on this call can specifically reach out to me on.
Oh, okay. All right. Thank you.
Yeah, you're welcome. All right.
Yes, Samuel.
Thank you. I actually wanted to ask.
Samuel, we're struggling to hear you.
Sorry, that's fine. I will try and type.
Okay. Aro, you can ask your question. Yeah. I can't hear you.
Can you hear me now? Can you hear me?
You can type your question. You can just use the chat box.
Okay, better. I think that will be better. See
Yeah.
where you are is echoing somehow.
All right, Emmanuel.
Hi everyone. Good afternoon. Sorry, please can you hear me?
Yeah.
Yes, I hear you clearly.
All right, so I just want to quickly clarify what can you say is the thin line between tax planning, tax aggressiveness, and tax evasion generally in compliance, like for a company to comply in paying tax? What's the thin line between those three concepts?
Okay.
What?
So I get the part of tax planning. I get the part of tax evasion, right? But that aggressiveness. There's somebody that's having a bad background. Please let's be muted while the question is being answered. Thank you. So, like I mentioned, maybe subsequently you would explain what you mean by that tax aggressiveness. But let me quickly explain tax planning and tax evasion. So there are two different things, right? So, of course, tax planning is a kind of strategy around how you apply your taxes, how you take advantage of the tax loopholes, right, to maximize tax returns. So you maximize incentives, maximize opportunities around taxes without necessarily breaking the law. However, sorry, I don't know, somebody is, okay. However, tax evasion is a criminal activity. So evasion means that completely avoiding taxation, that is avoiding any kind of tax. So evasion is a criminal activity. However, tax planning is not a criminal activity. So it's just about you using strategies to manage tax exposure. Now, I don't know if you want to explain what you mean by the tax aggressiveness, because that looks, I don't know if it's to the part of the authority or to the part of the taxpayer.
Manuel, you
Sorry,
can
please.
clarify.
I was in a noisy environment. I had to wait till I get somewhere better. So, tax aggressiveness. I actually worked on a final year project that talked on tax planning. Initially, I was assigned tax aggressiveness. So they were actually very, very similar in their concepts. So I just need to know if there's like a thin line between the both of them. Obviously, aggressiveness is still the same thing as like trying to leverage every, will I call it loopholes, or kind of a way to minimize the amount of tax you get to pay by leveraging those incentives and benefits that are provided within tax laws and regulations, given that that company actually meets the requirements or the prerequisites for such. So I just wanted to confirm if there was like a thin line, or basically they're like the same thing.
Okay, I think I get that now. So tax aggressiveness, you can also liken it with tax avoidance, right? So if you look at the provision of the tax, they won't say you should not take advantages of tax loopholes. So aggressiveness is only one method. Aggressiveness and tax strategy, they are alike, right? It's just the context. So when you are too aggressive, sometimes it can also lead to evasion. If you are trying to manage tax to be paid on a particular item, you are saying, okay, this item is baby product, but it's also used by adults. So should I subject VAT or not? Now, you need to look at substance over form, right? So that you don't eventually fall under the category of tax evasion while you are trying to manage your taxes. So it's always good to have prior evaluation and do like a benchmark study to look at whether what you are trying to do is actually in line with the tax law or against tax law. So whenever it contravenes the tax law, it becomes evasion, right? And when it's still in line with the tax law, then you can say it is avoidance or tax planning strategies. Hope that clarifies your question.
Yes, it does. Thank you.
You're welcome. All right, I think we have Abdul Ghaffar. Please, you can go ahead.
Abdul Ghaffar, you can go.
Okay, yeah, good afternoon. So I have 2 questions. Hello?
Yes, you can go ahead, please.
Hello, can you hear me? Okay.
Yes.
I have 2 questions. One on the tax clearance certificates. So because so I want to get the clarity. Is it that an employee has to have worked for 3 years and the employer ought to have filed a pay return for 3 years before such employee can have TCC? And secondly, is it necessary for an employee to also do filing aside from the annual filing done by the employer? Then for the issue of the threshold, for VAT, when we have a small company whose revenue is below 25 million, and they happen to be supplying a big company that file for VAT. So how would they treat such transactions, since the small company is not meant to charge VAT? How would they treat such a transaction? Thank you.
Thank you very much. And I love that question. It's very strategic and straight to the point. So if I get your first question correctly, you were trying to ask employee that has not worked for 3 years, and the tax clearance certificate says that information for 3 years must be disclosed. How can we get a TCC? So it's actually so based on the provision of the tax law, right? They didn't say that you must have remitted for 3 years. They only state that you bring the information for the past 3 years remittances. So the tax clearance certificate should disclose how much you've paid in taxes for the past 3 years. And just to support that, right? If a company, let me use from company perspective before I go back to individual. From company perspective, if a company starts business today, the FRS will issue them a TCC, and that TCC will have 0, 0, 0 for all the 3 years. So we have revenue 0, taxable profit 0, tax paid 0. If the company is in the second year and they've made taxes for that year, right? When they issue a TCC, it will have tax of the actual amount they paid in the current year, and then the last 2 years will still be 0 and 0. Reason being that they didn't remit and they didn't pay or generate any revenue for those periods. So there is no taxes paid for those periods. So ideally, that is how it should be. if you just started working today or yesterday, it is not expected that you have a TCC. It's just that we have a very aggressive system in the country. So if you start working today, it's not expected that you have a TCC. That's why you see people in school, children, they tell them to bring their parents TCC. But if you started working for like 3 years ago, 4 years ago, it is expected that you have a TCC. At the point you cannot provide it, it is where the problem now becomes you have to reach out to your employer, or if you are an individual, you have to go and pay a certain amount to the tax authority so that you can get your TCC. Now, for the second question you asked, I think that's around getting your TCC, right? Can you just quickly remind me of that, your second question, before we go to the last one?
The last one is on VAT. I said for threshold, small companies that is
another one you asked after the TCC in terms of
okay. That after the employer has done the annual filing, is it necessary for the employee to also do filing, the payee filing?
Yes, fantastic. So thank you for that. Yes, so according to the Personal Income Tax Act, right? It's expected that everybody disclose their income annual returns on or before the 1st of March. So even though you are an individual, of course the corporate aspect, which is the Form H1 that is being submitted on an annual basis, is being filed not later than 31st of January of every year. So the individual aspect of it is supposed to be filed in March, right? Not later than March ending. Now, it is expected that you disclose the total income you earned from your employer plus other income you earned from your own personal businesses. So let's say your employer is paying you assumption 100 million per annum, and from your own personal business you earn 20 million per annum. Ideally, your employer would have declared that you earn 100 million, and they would have mentioned the taxes that was paid on it. So what you are now to do is to come and declare that, okay, my employer paid me 100 million this year, and in addition to that 100 million, I also earned 20 million. And the excess taxes on this 20 million, I'll be paying from my own personal pocket. Then you pay it, and then that's all. So by the time you file that returns, it certifies that you have actually filed for the year, even though your employer has filed before. Now, that taxpayer ID, that is where it becomes important. If it's a working system, in a working system, your employer's payment should synchronize to your portal, and you should be able to see all the payment they made on your behalf. But because of the system we operate in Nigeria, I can't blame the employer, I can't blame the employee, I can't blame the revenue authority. Things are not just working sometimes. So I know that they are working around developing that, but ideally, you are supposed to file your returns as an individual also, irrespective of whether your employer has filed or not. So that one is as for the second question. Now, for the last question around VAT threshold, very important question. So even though that one should also follow the purview of my own, I'm giving this as my own personal opinion now, not for organization, not for my company, not for anything, just for my own personal opinion. So where the company's revenue is below 25 million, and you are transacting with an organization, let's say like MTN, that will be told VAT at source, right? You are asking that, how are they going to account for such VAT? How are they going to recover such VAT? So I think there's a recent provision under the Finance Act. I think there was a recent provision that was done by the FIRS, such that people can now recover those VAT that were charged. But even though it is not like expressly stated in the provision, what I would just advise is that at the point of transaction with that company, we will let them know. Of course, that is why they ask for your TCC. If the company receives your TCC and they see on your TCC, because your TCC will declare your revenue, they say on your TCC that your revenue is below 25 million, you have the right to put it on your invoice. Put a note on your invoice that VAT not applicable on the basis of this company's turnover being below 25 million. It's as simple as that. Now, if they now go ahead to charge VAT on it, then you cannot determine whether you still want to be doing business with them or not. So that is my own personal opinion, right? I know that it's not usually easy. And another thing that you should also consider is that and my company is 25 million naira last year, will they see 25 million naira this year? Can you do a projection to see what your revenue will look like? If you have not been withholding, or you have not been charging VAT from January to September, and in October, suddenly your company revenue is 28 million. FRS will not hear all the story that you have not been charging VAT. So of course, it's explanation, it's like explainable, and you can argue it, right? But there are also processes around it. So I'll just say, meet the consultant to help you structure your invoice such that it can capture the information that your company is under the small companies categories. I hope that answered your question too.
Yes, thank you.
All right, thank you. So I think we have Samuel Depumi, we have Raymond.
Yeah, we can be answering some of the questions on the chat before they just come. Like I know Balogu Quadri asked the question. Please, my question is that are government officials like governors, senators, or top government officials liable to pay tax or exempted from paying tax? That's the question.
Sorry, come again, please. I didn't get that. Sorry.
Are government officials like governors, senators, or other top government officials liable to pay tax, or are they exempted?
Okay, well, I've not been in their position, so that I will know whether they are paying their taxes. But I'm sure of something. The tax law does not exempt anybody from paying tax, right? Maybe except for maybe diplomats and the likes. But from, at least to the best of my knowledge, I know that the revenue authorities, FIRS, who are also government officials or government workers, and of the government, the labor force and the likes, as well as people in the government, they all pay taxes. So as a result, I expect that the governors, senators, and whatever the role might be, to also pay their taxes as at when due. In fact, I'm even more certain because most of them run different organizations, and they cannot hide under the fact that they're into government and they're not going to remit taxes, right? So that they pay their taxes as at when due, irrespective of whoever they are, according to the provision of the tax law. Thank you.
Okay, there's another question here. Which companies are obligated to charge VAT?
Okay, thank you very much for that. So companies obligated to charge VAT, I think that's section 4 of VAT Act, if I'm correct. So companies are appointed by the Federal Inland Revenue Services as agency of tax collection. Ideally, all companies are agents of the government in VAT collection, but specifically, some companies are agents of government in VAT withholding. So these companies includes, according to the recent appointments, so prior to now, we have the MDAs, right? We have the government agencies, we have parastatals. So if you do business with someone like LIRS now, they are government agencies. If you do FIRS, they are government agencies. They won't pay VAT to you. They will rather withhold the VAT, right? So some other agencies like that, oil and gas firms, yes, oil and gas firms, they will withhold the VAT. They will also withhold the withholding tax, and they will still deduct NCD again. So all these companies I've mentioned, oil and gas firms. Now, in addition to that, the Federal Revenue Service, in their recent publication, I think December last year, which became effective January 1st this year, mentioned that MTN, Airtel, some other telcos that were appointed again, as well as deposit money banks, that's commercial banks in Nigeria, as well as other banks, let me just say banks generally, have now been appointed as agent of VAT collection. So, agent of VAT withholding. So they are responsible they are actually empowered to withhold VAT on your transaction. Instead of paying you the VAT, they will withhold it. And then they are now to remit to the government directly. And they are actually the ones that fall under the category of that 14th of every month. So they are the ones that, those withholdings that they withhold from you, they are expected to remit it on or before 14th of the month following the month of transaction. So I hope that clarifies your question in that aspect.
Okay.
Any other question from the chat box so that we can move to?
None. So Samuel will just go. So these are the last set of questions, Samuel, Raymond, and Stephen. So in that order, please, let's make it very brief, 30 seconds.
Okay, thank you. I wanted to ask that clarify if the finance activity has been technically silent or still false. Thank you.
I can barely hear you, and I think you're muted already.
Can you take the question again, Samuel?
Okay, please confirm. Can you hear my voice now, please?
Yes, it's better.
Very good.
Okay. So my question is, I just want Richard to confirm if the Finance Act 2022 has technically been silent or it is still obtainable, applicable.
2022. I want to, because there's no Finance Act 2022. So can you confirm again? Do you mean 2021? We currently have Finance Act 2019, Finance Act 2020, Finance Act 2021, and Finance Act 2023. So this last one that they released is not 2022, because of the time it was released. So it's 2023. So are you referring to Finance Act 2021?
Why you clarify? So you can just go to the next. Okay, go ahead, Samuel. Why you clarifies?
Okay. Let me move to the next person.
Yes, you can just move to the next person. Raymond.
Is Raymond on the call? Raymond.
Yes, I'm here.
Go ahead.
My question is, now for an employee that has worked in two different states, let's say in Nasarawa and then in Lagos, at first his remittance for payee was done in, let's say, Nasarawa, then he relocated based on another job to Lagos. Now there are two different IRS offices. Payee is for in those states, that's where you remit it, not FRS. So if the person wants to apply for the TCC, how would he align those incomes so that you show that he has been remitting his taxes for those years properly?
Okay. So my answer to that question would be to visit the tax office, right?
Okay.
I can provide a blank answer from here, but trust me, the answer will not be applicable for the kind of system we operate in Nigeria. So it's better you visit the tax office, you explain the situation to them, and possibly you must have, or you need to get your TCC for the other states also, right? So that your declaration in this current place can be accepted and they can possibly issue you a TCC that would have the correct information.
Okay. Then my second question is for a company that is starting up and they've been paying import duties which carries VAT. And I saw that for remitting or for claiming those VAT for import duties and it has to be within 90 days. Now, they didn't have an accountant for that particular period of time. After that 90 days, which is said to have expired, they now got an accountant. So how is it possible to reclaim those VAT as credit for the company? How will the accountant file that so that we can claim it back? Since it has passed the expiration date of when he's supposed to file for the returns.
I didn't get that very well. I want to understand the part of expiration.
Okay. Import duty, VAT on import duties.
Yes.
For you to get those returns back to your company, it has to be filed within 90 days of from the day you paid for those import duties. Now, this company has paid those import duties and then it's over 90 days before they got an accountant to then now file for those returns. Now, by the Tax Act, it has passed the expiration, 90 days has gone, but then they still want to claim that they are VAT so that they will have those credits to them and they can use it to clear other maybe withholding tax and other things that are coming up. So how will the accountant then file for those returns that are past expiration date?
Thank you very much for that. Although I think you are misunderstanding the provision of the tax law. I believe the 90 days you are talking about is on refund of VAT.
Yes.
And
Yes.
not the claimability of the input VAT. So there are two different things.
Yeah, refund of the VAT paid on import.
Yeah. No. There are two different things. Refund of VAT, right, is where you have excess payment of VAT. So I might be corrected, but from provision of the law, it's not really from that angle you are looking at it. It's actually from the perspective of where you have excess VAT. Let's say you're supposed to have paid 10 million and you have paid 50 million. You're not seeking for refund, right? The refund process requires that you apply to the relevant tax authority within 90 days, which is the FRS. So that's a different thing. For input VAT for imports, that one is usually on the basis of consumption, right? So it cannot expire as long as your input and you've not consumed that goods, right? You can always claim at the point of consuming the goods. So it will not expire and it cannot form part of your refund.
Okay. Clear on that.
All right.
Thank you.
So yeah, I think one more.
The last person, Raymond, you can go now.
I think Raymond just spoke now.
Okay, good. I think that would be
somebody will not talk the other time.
Okay, yeah, I think that would be all for now. So yeah, thank you very much, Richard. It was really nice having you with us. As I mentioned, what we're trying to do is just to get a lot of people, especially the young finance and accountants, more informed. And for people that are just trying to navigate their career, we also have career talks. We'll have one next week talking about navigating a career in development economics. So do well to join us by 2 p.m. Next week. For some of you that can hear, I shared it just now, just share the flyer again for some of you here. And please do well to, Richard wants to appeal to you. For some of the people here, you mentioned that you're going to share an email. So I don't know if you're going to share that and any final words for us before you leave today. Thank you very much once again.
Okay, I will drop the email right in the chat box now. Please, only for important and urgent
issues. Yeah. And please, guys, do well to respect that access. Do well to respect that access, please. And so that our guest does not get bothered over frivolities. Okay, so any final words for us, Richard?
Okay, no. So I'll just encourage everyone. Thank you very much first of all, for the CFO Africa platform for organizing this kind of session. Trust me, it's if I'm going to do this in a corporate setting, I know how much would have been charged. And if they are also to collect a particular fund or fee from every participant, they know how much they could have earned from this. So I want everyone to take advantage of this opportunity, right? Of course, it's a one-off opportunity, right? Take advantage of this, and if necessary, reach out to the team, right, to get more information. And also, by supporting this organization, what you can do is by sharing the content, making recommendations for them also, and overall, right, developing yourself, which is the main purpose of this session. They want everybody to be up and going, right? CFO Africa is not just about trying to say the name, right? You should also pursue the goal, the vision of the company, right? And I hope everybody, and I wish you all the very best as you pursue your career goals in this line. Thank you very much, CFO Africa and the team.
Thank you very much, Richard. And do have a lovely day, everyone. Cheers. See you next week. Bye-bye.
Sorry, I think there was a mistake in that email I sent. Just a minute. So I've updated the email.
Okay.
contact.richardokunola@gmail.com.
All right, thank you very much, everyone, and enjoy the rest of your weekend. Thank you very much, Richard. Really appreciate joining us.
Yeah, thank you very much. It's nice meeting you again.
Yeah, nice. Same here. All right.